Time now for business news with Stephen Carroll. Hi, Stephen.
Hi, Monty.
So we're starting with the economic impact of the war in Ukraine and a new report from the OECD.
The Organisation for Economic Cooperation and Development has warned of a major economic shock from the Russian invasion. It says that if the current volatility in the price of things like oil and wheat are sustained, it could wipe a percentage point off global economic growth this year. On top of that, inflation would also rise significantly. The OECD says governments need to act to cushion the blow of higher energy prices and produce more food to counteract the loss of supply from Russia and Ukraine. I've been speaking to the OECD's chief economist, Laurence Boone.
This has a huge impact, actually, on global growth, beyond the humanitarian crisis, obviously. What we're saying is that it could reduce global growth by 1 percentage point, and the effect would be the largest in the European Union, where it would cut growth by up to 1.5 percentage point.
There's also an effect that you're seeing for inflation as well.
Absolutely. So inflation, thanks for, I should have mentioned that before. Inflation will be between 2 and 2.5 percentage points higher when we already were having quite high inflation before the conflict erupted.
What is it about this conflict that's having such a large and widespread effect? What are the areas that are being most affected?
So what you're seeing really because of this conflict is not so much a hit to trade generally, because Russia and Ukraine have quite a small size in comparison of the global economy. They're a small trade player as well. But in some segments, they're really strong. And that has to do with wheat and cereals, where combined together, they're roughly 30% of global export of cereals. And also, obviously, in energy, whether it's oil, gas, and coal. And what has happened is that in anticipation of further disruption, both to cereals harvest and to energy flowing through Europe, then oil and gas and coal prices and wheat prices have surged.
What would happen if Russian energy exports to Europe were to end?
So we've looked at this, and that would create disruption. So first, we think that it would roughly cut the European Union output by about 1 percentage point, but the effect would be very diverse across countries, depending on how dependent on Russia, oil and gas these countries are. So that's the first thing. And obviously, it would also send prices even higher. Ultimately, some companies may have to shut down or at least suspend temporarily productions. And you know how supply chains are integrated, so we might see ripple effect across many sectors, not only energy production, but also transport, manufacturing, semiconductor, where Russia and Ukraine are producing a lot of input for this, and many others, because energy is part of every sector's production.
What should governments be doing about this, given the economic risk?
So the first thing is obviously taking care of the refugees, and that will be a heavy burden for the European Union, so there should be some burden sharing here. Now, faced with the commodity price shock, I think there are two things. One is about food. The countries that most depend on these cereal exports coming from Russia and Ukraine are the Northeast and North Africa. We should make sure that there is production elsewhere, that there is logistics, to transport this production from the rest of the world to the Northeast and North Africa, and that we don't put barriers to trade of agricultural products, because those countries need it a lot. So that's for food. Now, for energy, as you know, the lower income people or lower middle class spend the highest share of their salary on food and energy. And for this, governments should really step in. They should put in place targeted measures to these people, temporary for the time of the crisis, to actually soften the cost for them. That would also limit inflation, because then you would have less demand for a lot of wage rises, which would be justified, by the way. Then ultimately, and that will be my last point, ultimately, governments absolutely need to reduce their dependency on not only Russian oil and gas, but also on fossil fuels, because that will be the thing that will ensure our energy security looking forward.
Well, so next to a decision by America's central bank to raise interest rates.
The Federal Reserve raising rates for the first time since 2018. This as the central bank tries to tackle the highest inflation the United States has seen in 40 years. The benchmark interest rate will rise by 1/4 of a percentage point, bringing the new target range to between 1/4 and 1/2 of 1%. Fed officials are now expecting to raise rates another 6 times this year. Here's what Fed Chair Jerome Powell had to say about the impact of the war in Ukraine on the American economy.
At the Federal Reserve, the implications of Russia's invasion of Ukraine for the U.S. economy are highly uncertain. In addition to the direct effects from higher global oil and commodity prices, the invasion and related events may restrain economic activity abroad and further disrupt supply chains, which would create spillovers to the U.S. economy through trade and other channels. The volatility in the financial markets, particularly if sustained, could also act to tighten credit conditions and affect the real economy.
The markets had been expecting that move from the Fed, so shares rose on Wall Street and in Asia earlier. European markets now, they're looking to a decision from the Bank of England in the past few minutes to raise interest rates there. They're going up to 3/4 of 1%. That's as the Bank of England is warning that inflation could reach 8% in the UK this year. European markets had started the day with pretty significant gains, but those have eased, as you can see, as the trading day has gone on. We're keeping an eye on oil prices again today as well. They're rising again. That's after the International Energy Agency warned that markets could lose 3 million barrels of oil a day from Russia next month. Brent crude there, you can see, up over $103 a barrel.
So meanwhile, the Russian economy has been just devastated by these sanctions. Vladimir Putin's been promising actions to help Russians who've been affected.
The Russian president says that he will raise the minimum wage and the salaries of public sector workers to counteract the effect of those sanctions on the Russian economy. Vladimir Putin also promising to raise pensions and other social welfare benefits. Since the war began, the value of the ruble has plummeted, pushing up the prices of imported goods. Consumers have also seen shortages of some staple goods. That's due to panic buying.
Okay, Stephen, thanks so much. Well, that's it for now. Stay tuned for more world news coming up here on France 24.